All right, good to go.
All right. Hey, guys. So today is Friday the 28th and coming up on the last week of the year here. And today yesterday we did the announcement class kind of talking about some of the changes that we're making to the community and the things we're adding. And one thing that we're going to be doing is once a week, we're going to be doing kind of a more in-depth crypto market update. And really, that's not even the right name for it anymore because we're adding a few other things outside of just looking at like technical analysis, and kind of the format that we're going to follow. And this could change as we get feedback from you guys or kind of learn, what areas of focus are most important. But the class schedule is going to look something like this, where we're going to start off by talking about.
You want to share your screen?
Oh, sorry. Let's see. That would be helpful, wouldn't it? There we go. Can you guys see that? Cool. Yeah. So the first thing we're going to be kind of talking about is developments and opportunities. Basically, thinking anywhere from like today out to 3 years, looking at where we think the ecosystem is headed, what opportunities we see, new developments that have happened over the past week, and any just kind of opportunities that we see, right? And that'll lead into either new projects or new offerings that we're looking at. So that could be security tokens. It could be, I don't know, new startups outside of a security token, but that support the crypto ecosystem. Could be, new developments with existing products. Then we're going to look at market possibilities, probabilities, and plans. So basically, instead of, one thing I kind of want to get you guys away from is obsessing about every trading day's intraday action, right? Like if your day primarily looks like this, where you're looking at an hour chart or shorter, and you're just over obsessing and getting tick locked on every little move, that's really not the right way to do it. The way that we've taught through the boot camp and kind of the top level overview is to start with the big picture, look at market structure areas, come up with possibilities, probabilities, and then structure a plan around each one of those. And so instead of kind of being reactionary to the markets, we really want to just help you guys hone in and develop the skill of anticipation and creating plans. So no matter what the market does, you're ready for it. Right now, obviously, like black swan events and things can happen in the market. But for the most part, if you think about all of the possible outcomes that could happen and then weigh the probabilities and then set plans based on everything, you're going to be okay. Like, it's whenever you get overly focused on one side of the market or get really stubborn or get tick locked or any other of the mental / technical mistakes that you can make, that's where you start to run into problems. So that's another reason why we kind of wanted to condense the market updates, is to just go deeper with the analysis and only make changes to positions when one of your plans gets triggered, right? So we'll talk about that, and I'm going to give you some like in-depth stuff today, and then we're going to take more time to do Q&A. I know when we're doing these classes every day, we get to some questions, but we're not able to get to a lot of them, and so we wanted to kind of extend the class time for that. And obviously, guys, I know people have different schedules, and I know the new time at 2 p.m. Eastern is going to be better for some people and worse for some people. For us to be able to do these longer classes, that's just the time that we needed to put it at. So that's why we're still recording these classes. And obviously we have Discord. If you guys ever have questions, like we're there. So
yeah, and if you can't make it to any of the live classes, but you have a question that you would like answered live, you could always feel free to private message us on Discord.
Yeah. So I don't think there should ever be the fear of like, oh my God, I can't make the live class, I'm going to miss out. I mean, we have the recordings, and if you have a question that you can't ask live, just ask us in Discord. So starting next week, next Thursday is the new schedule, and the class time. Like I don't really know. Rocky and I were guesstimating it's going to be maybe an hour and a half or so, and it could go longer if you guys have questions. But we really wanted to just make it more structured. That way we could get through more information in less time, right? And when we were doing the daily updates in the winter season like we have now, Rocky was feeling like he was just kind of repeating himself over and over and over again, which is fine. But again, we want to help maximize your time as well. And so we're still going to do, rants and opinions and stuff like that. It'll just be more efficient. So yeah, David, and we're going to send an email kind of bullet pointing and making sure that you guys are all clear. And obviously, if you have any questions with the new setup, let us know. But that'll all be starting next week. I think, we have New Year's on Monday and Tuesday. So the first thing we'll be kicking off is the new market update on Thursday the 3rd. And then from there, we'll be back to a normal schedule. So, so we'll shoot an email. So, all right, so let's go ahead and dive in. So the first thing that we want to talk about, and this is kind of how I begin my days, really, and maybe not every day, but at least once a week, I look at the progress and big developments that are happening in the crypto space. And I just look for, obviously we want to kind of gauge market sentiment, but because I'm bullish on Bitcoin and crypto long term, I look for developments and things that are either launching or progress that's being made in different areas. And this is really about like cutting through most of the BS. So one thing that I'll say, let me actually pull this up for anybody that's using, TradingView or Coinigy or any platform that gives you like news articles. I'll just say that for the most part, I ignore any article that talks about Bitcoin's price, because 99.99% of the time, anytime somebody in the news or the media is talking about the price, they're writing that article just to get clicks. They usually have no freaking clue what they're talking about. And the last person I'm going to listen to their opinion on about the price of a market is a journalist. No offense to any journalists, but if they're writing these articles to try to get clicks, that's not good information that we want, right? So like most of the articles that even like CoinDesk's write, that talks about the price, I just ignore. And there's really not a lot up here today, but just in general, I ignore those. The ones that I do pay attention to is stuff like this, and this is something that I've been talking about for months, is how I think 2019 is going to be the year of STOs, right? And so this guy today was just talking about how security offerings are becoming the new ICOs. And by the way, what I'll do is I'm going to post all these links in the general chat. So if you guys want to pull these up, so I'll do that right now. So like this one is a very good kind of history of, stocks, how, we literally used to trade paper, and then the NYSE would like shut down every week just to like process trades and settlements. And then now, like for most people that own stocks, you don't actually control those stocks. They're usually with the DTCC. And then really what's happening right now with security tokens is kind of twofold. Like on one hand, I think, over the next few years, we're going to see tokenization of like regular securities markets. So this is kind of like evolutionary for stocks. The evolutionary part of that is we're getting access to new tokens and new asset classes, right? So you can read through this, but this again is just something that I am super, super, super excited about in 2019. Despite the fact that, altcoins are down over 90%, and that's happened before, right? These boom and bust cycles. I think security tokens and just tokenized fractional ownership in assets is a way more sustainable and I think it's, talking about market caps, like everybody got excited about these low float, low trading volume market caps of these altcoins. Like the cool thing about this, I think we're going to, here's a prediction for you. Over the next, maybe I'd say 1 to 3 years, I would not be surprised to see at least $500 billion in security tokens get launched. Now, and that sounds crazy. That sounds like a lot, right? But the cool thing is like the market cap of these security tokens isn't going to be just air on like a white paper where you you have some shitcoin that creates a token and then all of a sudden it's got $250 million market cap, right? Like these security tokens, a lot of them are going to be backed by hard assets. So that's why I say it's going to be sustainable. Like you're going to have a security token that's linked to real estate, for example, right? That's a hard asset. That's real value. So when we tokenize, say, $500 billion in the next few years of security tokens, like that's going to be much more sustainable. I don't think it's going to look like a big boom and bust pattern. It's going to look more like the stock market, like the S&P 500 over time, where it grows over time, right? So that's my opinion on that. Rock, do you have anything to add or any other opinions on STO?
Yeah, I think one of the most revolutionary elements to the STO is the ability, for instance, settlement and the ability to actually have an audit trail, a public audit trail of securities. Mm-hmm. Patrick Byrne of Overstock, CEO of Overstock, talked about this a lot, about naked short selling and how, because there's like a 3-day settlement time with the depository trust company, people were basically naked short selling. They were borrowing stocks that they didn't actually have to short and sell the market, taking advantage of that gap in the settlement time. So what this is doing is creating a form of what you could say fractional reserve on stocks and messing up with the supply. So if we tokenize stocks and have it on a public blockchain where everyone can see it, it's possible that settlement would be a lot faster, and we would have an audit trail which would prevent things like naked short selling, right? So those are, I think, two major revolutionary points with security tokens. And I think that as they grow, and especially since New York Stock Exchange and NASDAQ are already invested in crypto and see a future in it, I think we're going to see eventually we might see the entire stock market completely tokenized.
Yeah, I think that's inevitable. And Jose was asking, so the development of those tokens would be a lot slower as well. So here's the thing, in theory, these tokens could actually be created very quickly. There's a lot of private equity. There's a lot of private securities that are out there. And I think the next, I would say 6 months are going to be really crucial to how fast this is going to happen. So for example, and we'll talk about this more in a second, but this is one of the deals that I'm looking at is through Harbor. It's a student housing deal. It's a $20 million raise in South Carolina. It's an existing luxury real estate property just a couple of blocks off of the University of South Carolina. And this is kind of to me, this is a big test, because if this succeeds, I think, and if they raise and they close the round and they're like, dude, these crypto people are investing in this and it's a good way to go, that's going to spread pretty quickly through the private equity community. And I think everybody, just like we saw the VC rush in Silicon Valley last year into crypto, I think that could be another rush of capital into those markets. So I've been doing due diligence on this, and I'll talk about this more in a second, but I think the next few months are going to be very, very crucial to the speed at which these things start to get listed. So there's a couple of ways to get started in this now. So I'll show you this. There's a couple of links that there we go. Crypto. Okay. So this is basically, there's a few websites that have put together like these current ecosystems. And there's a few different roles that companies are going to play. So I'll put these in the general chat if you guys want to pull these links up. But you can see the main ones are like custody, right? Like BitGo is a big one. Issuance, like, Republic, which my Angel Network actually invested quite a bit in this. Start Engine, you can see Polymath, Harbor. These are the companies. Indiegogo, I actually had dinner. Rocky, you remember we had dinner with her in San Francisco?
Yeah.
There's a lady that is basically the head of crypto for Indiegogo, and we're connected with them. So these are companies that are basically issuing these securities. Then you have like broker dealers, legal, trading platforms like T0, compliance. So this is like, I'm probably going to print this out because I imagine 5 or 10 years from now, this list is going to look not only a lot bigger, but just dramatically different. But you can see here's I guess these are really sponsors. I don't so much like that one, but the point is like there's an ecosystem being built around these. This is actually a really good article. I'll post that in Discord. And you can just see like what these companies are doing. Now, here's the thing, just talking about like regulation and stuff and who can participate. For the most part, at least right now, from a regulatory standpoint, there's no difference between security tokens and just like a private angel round from a legal regulatory standpoint. It's just the token is like the technology behind it. So for example, like whenever I make an angel investment, I typically get my stock certificates for a private company through a company called Carta, or a website called Carta. And basically you just get this printable like stock certificate. It's kind of weird. So the main difference is with these new private securities is you're actually going to get tokens in a BitGo multi-sig wallet. Okay. So, and this is like super, super new stuff. This year is really the first year that this whole process is even coming out. So depending on how the company raises, depending on if they do Reg D or Reg CF, which is regulation crowdfunding, or Reg A plus, depending on how the company raises will determine if it's for accredited investors only or accredited and non-accredited, right? So there's a misconception that like security tokens are only going to be for accredited investors. That's not the case. A majority of the initial ones I think will be like probably Reg D, which means you have to be accredited. But there's so many different ways to structure these offerings. And there are already a few that are like basically like S1, like anybody can invest. So I can't really predict out like and say like over the next 12 months, X% are going to be Reg D, X% are going to be this. Like, I don't know how they're going to raise, but I just know that some will be like true, like private where it's only accredited, and some will be a mixture. And the nice thing is like after the seasoning periods, then for the most part, it's fair game. So that's why I say like, instead of, and I had this conversation and I guess more over a year ago than recently, but there were a lot of people that made millions from 2016 and 17. And like my non-financial advice was like, don't go buy a Lambo, like keep that capital so you can verify your accreditation, right? And to become an accredited investor, it's basically $1 million net worth, I think liquid net worth outside of your primary residence, or 200 or 300K for like 2 or 3 years in a row income, something like that. So I think that, and again, I don't agree necessarily with the accredited investor rule. I think it's ridiculous, but that's like this like level up that the US government put in place, because apparently if you have $1 million, all of a sudden you're smart, which a lot of times isn't the case. But I just think that's a really good goal to shoot for, right? And that's why we talk about like multiple sources of income and cash flow and like being like very smart with your foundation of finances. That way you can become accredited. And then it's kind of like once you get access to these deals, my God, man, I've made more on private investments than I ever have in public markets. So it's kind of like once you get to that level, if you're a wise and like granted, you can still lose money in these private deals, but like that's where I've seen the biggest growth in my portfolio is private stuff.
Yeah, the accredited investor rules are pretty much the same in Canada as well. Very, very similar
Oh yeah.
structure. Canada just likes to follow the States on everything.
Yeah. If I'm not mistaken, in Europe, like in the EU, I think it's a self accreditation thing. If anybody knows, correct me if I'm wrong, but I believe that in the EU, I think it's called sophisticated investor, which basically means nothing. It's like, yeah, I know what I'm doing. I'll check that box. I don't know if there's any dollar amount attached to it.
Yeah, I think what we're seeing in crypto right now is just kind of like a blending of the two worlds, a blending of the legacy world and the new world, the anarcho-capitalist crypto world.
Yeah.
And there's pros and cons to each side. The pros on the anarcho crypto capitalist side is you have absolute free market and free reign for anyone to do anything. And the downside to that is you get a lot of scammers. You get a ton of scammers, and then people who get scammed. And then what ends up happening is more people come into the scene. Those people who lose money, even if they're not scams, you have some people that just basically will call anything a scam, even if it's not. They'll complain to the government, they'll cry to the government, and then so the government comes in, they step in and they bring in the old legacy rules into crypto. And I think what we're just seeing is a blending of those two worlds. We're not in the free market that we had in 2014 in crypto, but we're also not. It's also not necessarily playing by the same rules as the legacy markets, because you do have blockchains and permissionless money and stuff like that. So we're just some growing pains there, and I think eventually we might actually see perhaps some new regulations or laws to kind of suit the crypto industry specifically, but that'll take some lobbying on behalf of some
I agree. And like Jose said, he said maybe they want to avoid mom and pop investors losing their money to scammers, which I totally get, right? Like I do believe that like there is some protection needed for certain investors. Like in a perfect world, like we would all be responsible investors and everybody would take responsibility for their own actions. But like most people don't feel that way, right? Which is why we have these like barriers to entry. And the same laws that like protect people are also the same laws that like keep the rich and, keep people out of that club, right? And that's why like I'm vocal about this. Because I do think there's a better way. But so here's the thing, without going on a tangent, like there's going to be some STOs in the US that are for accredited only. There's going to be some that are both. And then there's going to be some that are like, you know what? We're not dealing with the US laws, like we're going to go internationally and raise capital and build a company without the US. And I hope the US understands that. And hopefully that can be motivation for them to make adjustments to that stuff. But anyway, guys, without going too deep into the regulatory stuff, like I think that it's good that we're getting some kind of grasp on these securities from a regulatory standpoint, because as we saw last year, just the amount of scams. And like I was getting, at the height of this stuff, I was getting over 20 emails a day from projects that were like, Chris, we'll give you, $100,000 to like promote this. And I'm looking at these projects and I'm like, man, you guys are just blatant scammers. Like, don't talk to me about this. So I'm glad that a lot of that stuff has stopped. And again, I just think the next year, like throughout 2019, like I am really, really excited about this stuff. So,
That
Yeah,
sounds like it could be a good segue into that new Time article that
yeah, definitely. So the other thing that popped up today was this article on Time talking about why Bitcoin matters for freedom, and I was like, I'm really impressed with whoever wrote this because they get it. I mean, the idea of actual real world use cases, I think, is something that's really good for us to kind of remind ourselves about why we're in this in the first place. Like, it's one thing to look at Bitcoin as a market that we can speculate on and grow wealth by trading and investing in, which is great. But the deeper meaning behind that, like, why does this asset actually exist? And, it talks a lot about, obviously, like Venezuela, and then looking at just the different use cases of how governments do really stupid things with their money supply, and how still even today, less than 1% of the world has even used Bitcoin. So that's why, and Rocky, correct me if I'm wrong, but I think that's why you and I both believe that, like, the market cycles aren't over. We haven't hit mass adoption or mass saturation yet. Even though we had a big bubble last year, like, there's still a lot of people that are going to come into this space.
Yeah, absolutely. I think last year was like a taste of what mainstream looks like, a taste of what can happen to it, because we did
Yeah.
see a lot more mainstream attention and more mainstream people come into it, but still very, very low numbers, and the industry is still very new. And what I liked about this article, just so many articles out there that are just very superficial and around crypto. And, when we're in the hustle and we're focusing on making money, it's great and it's one thing, but it's also good to have a reality check and remind ourselves, like, what is this all about? Like, are we just in Bitcoin just to make some bucks, flip some quick bucks? Obviously, we're in it to make money, right? But it's so much more than that, because one can make money in all kinds of stuff, It's really about freedom, right? And financial freedom, like true financial freedom, is at least having a plan B or an option B to control your own money that's permissionless, just in case.
Yeah.
Right? Even as a hedge, even if it's just like a portion of one's net worth or whatever that's in it, it's a hedge, because you never know. Even in the States, they confiscated everybody's gold in the 30s. It was illegal to own gold. Right?
It's crazy that it wasn't even that long ago.
It wasn't that long ago. And you could basically massive fines and up to 10 years imprisonment. Like, when you think about that, that is like one of the most fascist things that a government could do, right?
Yep.
And other governments are actively doing stuff like that, right?
Yeah. I think in the West, sometimes we get patted from the reality of, like, what human nature really is, and, like, how, like, greedy, authoritative governments can just steal the prosperity of their citizens, right? And there's so many examples from around the world. And again, I'm not like a doom and gloom guy, but I like to think I think about things from a realistic standpoint. And like even Nassim Taleb said, like, Bitcoin's an insurance policy against an Orwellian future, right? Like, in the event shit hits the fan in the US or China or India or Indonesia or Russia or Brazil or any other country where there's a lot of people, like, Bitcoin is the flight to safety that I see. I mean, gold is okay. And I own gold, and Rock, I know you're into metals, but, like, at the end of the day, Bitcoin is such a better use and way, it's better money than gold, in my opinion, because of its divisibility and transferability.
Yeah. And I just kind of see this as like risk management and having options as a hedge, because even if those things don't happen, risk management is like looking at all scenarios, including some of the worst case scenarios.
Yep.
And the people who have actually created a plan, even for the unlikely worst case scenarios, are the ones that aren't caught, with their pants down, right? Like, they're prepared. People, it's good to at least have some type of preparations, right? Because you just never know. I mean, history has shown us examples time and time again, and we can get very comfortable in our modern living, but it's in some places in the world, Bitcoin is not, and we've had students, I remember from 2016, I might still have some students from Venezuela. I know one of them put his whole life savings in Bitcoin in 2016.
Yep.
Not because, he was a bull or speculative or anything like that, but because it was survival for his family. And that actually helped them survive. Whereas, a lot of people lost a lot of their money. And so, hyperinflation can be a thing. And obviously, if we, I don't think we'll necessarily go into depression or anything like that economically, but you never know. Things like that can happen, right? We are in some unprecedented economic experiments right now.
Yep, absolutely. And Stefan, I'm posting all these articles and I'm pulling up in the general chat in Discord, so you guys can go in there and see those links.
Yeah, one last thing on the fundamentals note. There's a couple of articles that came out in relation to a security vulnerability or hack for Trezor and Ledger.
Oh yeah,
it's Wallet. If you check out the site wallet.fail, they did a presentation. I believe it was yesterday. But the thing is like you need physical access to the devices. So what they did is they basically opened up the devices. They put another piece of hardware in it. Then they also have to install malware on your computer and then be in a room next door with a button to confirm your hardware sending a signal or whatever. So it's a very complex, convoluted attack that requires physical access to your Trezor or Ledger device. So a couple, until we see some security patches, we might see some security patches down the line. But what was advised in relation to this is that if you're using a Trezor, to use the advanced options of adding an extra word as a password. What this effectively acts like, it acts like a
2FA almost.
Yeah, it's kind of like 2FA, and it acts like a 25th word. It's actually like creating 25 word seed, right? So that's an important element because they were able to sweep people's 24 words through this attack. And obviously like keep your Ledger and Trezor and secure areas away from people.
Yeah.
I also think it's a good idea to have backups, right? Like let's say you have your Ledger out and, God forbid there's some kind of house fire or something. It's probably a good idea to have a backup somewhere. Maybe in a safety deposit box or in another location or something like that. So, and another security vulnerability that was attacked that was recently hit was the Electrum wallets.
Yep.
Apparently there was a phishing attack where they were intercepting the random servers and trying to get people to install malware. So it's just a good reminder and a precaution that anytime you do a transaction or an update or anything like that, just make triple sure, take your time, don't rush it, make triple sure that you're on the right site, that you're using the right wallet address and all that stuff, and there's no phishing attempts or anything like that. So it's just a good reminder that you have to kind of just take your time because these types of attacks can happen. That is another obviously risk, and this is just another element to risk management in cryptos, the security and privacy element.
Yep, absolutely. So yeah, it's crazy how they can just figure out a way to like slip in a little phishing box. God, man.
Yeah.
Cool. So I'm going to log back in.
So be wary of any of those pop-ups or anything like that. That anything that pops up that seems out of the ordinary, just be wary of that. Take your time and then look it up online and see if anybody. Usually people will blow the whistle on attacks fairly quickly. So.
Yeah. Cool. Okay. So any other developments or opportunities, Rock?
None that really come off. I mean, Litecoin sponsoring a UFC fight. That's kind of interesting.
Yeah.
Good marketing.
Yep. Cool. Okay. So next, let's talk about projects and new offerings. So the thing that I've been doing some research on over the past couple of weeks is the Harbor student housing deal. So basically what this is, let me scroll down and I'll just give you guys kind of the the overview of this. So what they're doing is they're raising 20 million bucks to basically acquire about 50% or 49% ownership in this luxury student housing deal. And you can see like the returns are decent. Like this is what I would consider like a low risk, low return play where it's an existing building. They have 99% occupancy. It's been fully developed since 2014. I think it does about 4 or 5 million net operating income. Come down here to the stats. So like, yeah, so going into next year, they're expected to exceed 5 million NOI. And so again, this is kind of like one of those deals where whenever you look at your portfolio, if you go, okay, I want X% of my portfolio exposed to real estate, I like these deals because A, I don't have to swing a hammer. B, I don't have to deal with tenants, right? So the upside is it takes no work. The downside is the returns are just decent, right? I mean, like this isn't something to get super stoked about. But again, in my portfolio, I look at, like my total risk capital and I say, okay, I want like call it 10 or 15% exposed to real estate. Then I'll look at this as a potential deal. I'm still doing some due diligence, and I have a call next week with the company that is offering this. So Harbor is the issuance company, but there's a few different players involved, and so I'm talking to the guy that's actually responsible for this offering. So after I talk to him next week, I'll let you guys know more, because I do have a lot of questions about this, and I really just started. I actually read the entire PPM on Christmas Eve. Nikki was so mad. She's like, you just took 6 hours on Christmas Eve to read this private placement. Like, what's wrong with you? But
reading up on your latest Christmas present here.
Exactly. I'm like, hey, no, I want to own a student housing. But basically the way that they're structuring this is they're offering just shy of 1,000 shares. So each token is 21 grand. So 21K is the entry level investment. There's a $50 million mortgage on it. It's got about 40 million in equity. So I like the deal. I mean, again, it's not super sexy. It's very simple. But as far as a real estate deal, like I like it. The only thing I don't like about it is it's tied to college, which I'm kind of bearish on. But but I know, they have stats kind of showing the growth of this college, and I do like the cyclical nature of student housing. Like it's actually pretty steady. And when you have a property like this that's like so close to a major university, and it's got a 99% occupancy rate, I just really like that. So again, not the sexiest deal, and basically the way that you would be able to participate in this is you get approved with Harbor. So basically you would fill out a form with Harbor, and then what they do is they verify your accredited status. So this is an accredited deal, and I think all the deals that Harbor are going to be doing are for accredited investors. And then basically you verify that, and then they approve you, which I saw somebody ask, like, how long did it take? For me, I think it was only a few days. I actually went on a ski trip, and when I came back, it was approved. I think my CPA sent them a letter or something. And then, yeah, so you can see, like, whenever you evaluate these deals, like a private real estate deal, you'll typically get a PPM or a private placement memorandum, which is like 100-page document that basically is a big CYA for the company, just talking about all the risks and what the structure of the deal is and bylaws of the property and who's involved. And it's pretty heavy reading, which I just kind of enjoy looking at this stuff and understanding the deal. So yeah, I'll let you guys know next week after I talk to the Convexity dude, and yeah, we'll go from there. I was going to say the same thing about universities in the U.S. The property can be repurposed for, yeah, exactly. So, it's this is definitely not a risk-free investment. Um, and I definitely have some questions. I'm not jumping in yet, but also it's, the kind of the undisciplined investor in me is looking at this going, man, it's the first like tokenized real estate deal. Like, don't you want to be a part of that? Like that's kind of the undisciplined part of me. So I don't know if I'm going to invest yet, but if I do, I'll let you guys know, and I'll let you guys know why and kind of the pros and cons that I see. And if you guys want to invest too, feel free to get signed up with them.
One thing I would look at from a macroeconomic perspective with interest rates rising is to see if how that'll impact mortgage payments
Mhm.
and how much wiggle room they have for those increased interest rates, or if that'll affect them or not, or if they're not
Yep.
locked in. So if I were looking at something like that, I'd probably look at their mortgage, because what is it, like 40? Did you say $50 million
Yeah, it's
mortgage or
it's
something like
50.
that?
Yeah, if I remember correctly, it's like 55 million and it's locked in, I believe, at 3.8%.
Okay.
But it's actually got a balloon in 2025, so they
Okay.
have to refi out.
Okay.
So yeah, that is a risk. If rates go up significantly before then, that's going to eat away at their net operating income. So that's one thing I'm looking at, and I want to ask them a little more about the terms of that loan and if it's assumable, and a few other things. So there are definitely some risks, and I'm glad you brought that up. Like interest rate risk with a balloon mortgage is one thing, which basically, if you guys don't know, balloon mortgage means like even if your mortgage isn't going to be paid off in 2025, it has a balloon payment, which means like you have to either pay this off in cash or refinance and get another mortgage. So that's one thing I'm looking at.
Interesting. Interesting. So they're paying like they're paying like probably at a high rate. Then it's probably not like a 25-year mortgage or something like that, much shorter time frame,
It's
I would
it's
imagine.
probably a 30 or 40-year amortized loan,
Okay.
but the interest rate is low, obviously because rates have been low, but also because of that balloon payment. And this is kind of typical with commercial stuff. Like you'll see a lot of balloon deals. Like anytime I lend money on a hard money basis, like there's always a balloon. And if it's to a private investor, it's usually only 1 or 2 years. Um, but like big commercial deals will typically have, I don't know, 5 or 10 year balloons or 15-year balloons.
I'm gonna launch a Balloonatic token.
Can this be tied into a non-taxable retirement fund? I'm not sure, Graham. You can talk to Harbor. I don't know if they link with like IRAs or what. I'm going to invest in this in post-tax capital, but yeah. Oh, yeah. So this is the other thing. So Cass says, are the tokens tradable? So this is the cool thing. Okay. So, and this is where, let me pull this up again. So here's how it works, right? So talking about this real estate deal, you have the convexity properties, which let's say they're the owner, right, of this real estate deal. And then you have Harbor, which issues the tokens, right? They do all the regulatory compliance stuff. They put the tokens, they work with BitGo to create the multi-sig wallets. So Harbor issues this token. And then what happens is, so you can see here on trading, eventually, and this is how new this stuff is. Like you should read, I can't show you guys the PPM unless you're approved on Harbor. But if you read all the legal speak, there's like so much CYA because in the agreement, they actually say like, hey, we don't know if these tokens are going to work. And we don't know if there's going to be a trading platform for these tokens. Now they're moving forward with the idea of trading on, a platform like AirSwap or T0 or, one of these trading platforms. But we're so early in this game, guys. It's kind of like, imagine if we were trading stocks like back in the early or mid 1900s, before there were like when we were trading like paper stock certificates, and then they were going to like electronic trading. That's kind of what's happening. Like we're literally on the front end of this whole thing, so they don't even know like how exactly this is going to work. So that's another reason that I'm kind of like, yeah, of course I want in this deal, because I want to be a part of the first like tradable like private equity in real estate, you know? So either way, even if I don't invest, and even if you guys do or don't invest, I think this is just going to be a really interesting use case and just really interesting to kind of watch. So the way that these work, though, in theory, is after 90 days, you can sell your token to another qualified investor. And then after the 12-month period, I believe you can basically sell it on an open market. So here's the thing where this is why I'm not like rushing to dump a ton of capital into this, because I don't know what the liquidity is going to look like on these exchanges. And so let's say there is no liquidity, and all of a sudden, let's say you buy a token for, let's say I bought one token at 21 grand. Let's say that dries up and the only bids are at 5 grand. Like, it's kind of like an ICO listing on, you know,
Yobit.
Binance or Yobit, right? And there's nobody there. Like, I don't know what this is going to look like. I could lose most of my value. You guys might be able to buy these a year from now at a fraction of the price. I don't know. You know, that's literally how early this is like it just hasn't been done yet. So we don't know what it's going to look like.
Yeah, that's an interesting point. Just a reminder, it's all still experimental, and
It is.
liquidity
It really
can
is.
be an issue.
Yeah, it's going to be interesting.
All right,
I just like pain. I'm a glut for punishment, so I'm probably going to make some of these early investments, and I know some of them are going to get really messed up, and I'm okay with that.
You buy for 20.
Hopefully you guys can learn from my mistakes.
I'll set some bids at $2.
Yeah, you're going to create a flash crash and get all my private equity at like 5%.
All your security tokens belong to us.
Yeah. Set those low stink orders. Oh yeah. So the way that this works, guys, is Harbor. They create what's called R token, which I think stands for regulated token. And in their blockchain, they basically build in that the idea here, and again, this is still unproven, but the idea is that they're going to build in all of these regulations into the code. So like they check like if there's a maximum number of investors that can be in a deal. If you try to sell a token, but that's going to go over the investor threshold, it'll say trade denied. Or if you try to sell your token to somebody that's not approved through Harbor or something, it might say trade denied. So in theory, what that's going to do is make the regulatory and the compliance side a lot cheaper and easier and faster. Again, that's in theory, right? We saw like the issues that the DAO had. You know, the DAO was supposed to do X, Y, and Z and make things so easy, and then it turned out to be a big disaster. So we'll see. I don't know. It's definitely interesting just being this early in this game, though.
Absolutely.
Yep. So cool. So that's really the main deal that I've been doing some due diligence on the past couple of weeks. Rock, do you have any new projects or new offerings or anything you've been looking at?
Not anything in the STO realm. I still have to go through the whole accreditation process in Canada, whatever that is. I think I lightly looked at it.
Yeah, I think basically you either send a bank statement, which I think is kind of dumb, or you can get your CPA to send a letter.
What if I flashed my Dogecoin wallet? Look at how many millions are in it.
Be like, look at all these Doshosties.
Yeah.
All right.
Mostly like as far as my own fundamental research is concerned, you know, every few days or so, I just kind of cruise the Tezos Reddit just to see whatever new things are happening in that ecosystem.
Yeah.
I'm really interested to see like which blockchain will end up getting the network effect as far as security tokens. Obviously, Ethereum's probably well poised for that.
Yeah.
But you know, we might see a lot of private blockchains as well.
Mm-hmm.
And I think the first public blockchain wave of STOs is going to get a big chunk of the network effect. So
yeah, from what I've seen, a lot of them are building on the ERC20 tokens.
Yeah.
And then there are some people, I think the article that I posted in chat talks about some of the different versions of the ERC tokens. And I'm not technical, so whenever I start reading those articles that talk about the different versions and the code, I just go cross-eyed. So if you guys have any insight on that, feel free to let me know, or Rock, if you hear something that I'm not aware of. But for the most part, what I'm seeing with the early stuff is ERC20. But again, like, people are predicting that might not stay the case, and I think there's a good probability that could be true.
Yeah, I think they're creating some different tokenized standards. I think the ERC20 seems to be really around ICOs, and I think there's like ERC 1400 or another ERC standard that I think the Polymath developers had a hand in. And then there's some ERC token standards that are kind of unique, like you just generate one token and it's almost like a collectible item where you don't have multiple copies of it. So you've got different types of standards. I know Polymath is kind of taking a lead on that as far as Ethereum is concerned. It'll be curious to see what kind of developments will happen on Tezos as that ecosystem grows. I mean, they basically, like with Tezos, they have to, before they start launching all these dApps, and there are some dApps on it, but before they start doing that, what's going to be most revolutionary is they have to have their first community vote to implement some new features at the core protocol level. So I think the thing that's first on the block is Zsnarks, Zcash technology, Zero Proofs technology.
Yep.
There'll probably be a first community vote in Q1 of 2019 on Tezos. So that's probably going to make some headways. This is cutting edge. This is the first time this is ever going to happen on a blockchain period in history. So that's kind of one of the major reasons why I'm super interested in that project in particular, because I see it as a trendsetter that's doing some cutting edge things, and also because governance just within Ethereum and Bitcoin I've just seen as such major obstacles, and it's I almost see it as like one of the missing pieces to these decentralized networks and decentralization, right?
Yeah.
So that'll be cool, because if that plays out successfully, then it's just going to be this blockchain that'll continuously be able to evolve and morph all the best features of any other blockchain into it and just kind of assimilate them all, on top of having a rich ecosystem of new dApps that can be created and possibly security tokens and stuff. And what I like about the voting process is it's not like some kind of cheap Reddit debate where, a bunch of trolls just start shooting their mouths off and following some propaganda that some, popular influencer came up with their website or whatever. Like, my biggest pet peeve with the Bitcoin block size debate was that a lot of non-technical people were voicing their opinions on it, including myself, right? And on matters like that, it's good that everyone has an opinion. But the cool thing with Tezos is if you want to bring a community vote or bring something to the table, you have to write the code first. Right? So you have to actually code whatever you want implemented into the blockchain, and then people vote on that code, and then it moves on to a test net to make sure that it's safe. So they test it kind of in the wild on a test net, and then there's another voting process, and then it gets merged into the core protocol level, right? So this has the ability to take out a lot of this like political riffraff, all this crap. People just like shooting their gums over theories and not actual practical application. So I think it has an ability to eliminate a lot of drama and stuff. But just from a tech perspective, I think that I'm just, obviously everyone knows I'm really into this project, and those are my main reasons. I like the whole kind of trendsetter. For me, I almost see like Ethereum. Like Ethereum was a trendsetter, for creating smart contracts or Turing complete blockchain. That was like the first time that's ever been done. That's why it became such a dominant market and such a big player. So I think anytime there's a lot of projects that are just kind of copycats, they copy the trendsetters, or they might experiment with new algorithms, but they're so small and fringe or don't have any funding that they don't go anywhere, and they're illiquid, or they're just dApps, vaporware dApps or whatever. So it's rare that we actually see new blockchains come out with new models, and who knows, right? That could end up becoming a standard for future blockchains, maybe even private blockchains.
Yeah. Yeah. And I think it's good that so I think this is the event. I put this in Discord too, that Polymath put on, and basically just trying to bring people together to create standards to make these security tokens work. Right. Cause like for example, this is a kind of a funny, visualization of it, but basically what it does in theory is it does all these automated checks like KYC and percent, number of investors and stuff like that. It can automatically check. So I'm just excited to see again over the next few months what standards do get adopted and kind of where this stuff goes.
Yeah, it'd be interesting to, as far as STOs are concerned, to get equity in large, perhaps the next big major players in the tech space.
Yeah.
Right. Imagine getting some equity as an early investor in Google or something like that. So imagine what's going to be the next Google of crypto, or, a Coinbase would be a good example. What was it in 2013, $100 worth of shares in Coinbase is now worth $100 million.
Yep. I retweeted this yesterday. I don't know who this is, and I didn't fact check these numbers, but guys, okay, let's actually pause for a second. I'm going to go on a quick rant. So, Ninjutsu, I saw you asked, let me scroll back up. Will this community focus majority on accredited investors? And then I saw Kat say, I hope this new info isn't for bigger fish because I'm not working with this kind of money. Let me just speak to the accredited investor thing and the private investments, and if there's any question or concerns about this. So it doesn't matter if you're a multimillionaire and you're an accredited investor, or if you're just getting started and you're trading with small size. Okay. I think the best goal, and again, this isn't financial advice, you have to make this determination and you have to choose this. But in my opinion, it is a really, really great goal in life to become accredited. But even more important is to understand how to evaluate deals, meaning private deals. It's the same thing as doing fundamental research on a cryptocurrency, right? Except some cryptocurrencies have already been around for several years and you have more information to work with. If we're looking at, say, this real estate deal, this is basically a white paper for this real estate deal, right? At the end of the day, this is why I think private investing and why becoming an accredited investor is so huge. Look at this. In the summer of 2012, Y Combinator, which is basically the biggest business accelerator in Silicon Valley, they paid $120,000 for 7% of Coinbase. 6.5 years later, the value of that is worth over $500 million. The next Bitcoin behemoth is hidden from view as Coinbase was to you then. I actually really, really agree with this, that there are companies right now that are either in ideation phase or they've already launched and raised capital. There is, in my opinion, there are companies coming down the line that are going to be worth billions and billions and billions of dollars. And that's where if you take a $5,000, $25,000, $50,000, $100,000 investment, that's where you can make more money on one exit than the prior 20 years of your life. That's how I think about private investing. Now, with that, it's very high risk, very high reward, right? So to give you an example, there's one private company I invested in here in Austin that I invested at the initial seed round, I think, was at a $10 million pre-money. And then now they just raised another round at 100 and something million. I can't remember the exact valuation, but it's basically over 10x in like 2 years, right? So those types of deals, like, you just don't get that often in the public markets. Why is that? Well, because all of the growth, and there was an article, I think it was on Forbes, that we shared a few months ago that talked about this, that a lot of the growth, and I expect this to be true over the next 10 years, a majority of the fast growth is going to be in private markets. And so I'm not the only one complaining about the accredited investor rule, but in the meantime, if you're not, that's why we're talking about like these other ways to create income, because that should be like, again, over buying a Lambo or doing anything else. Like, I just think that is such a great goal to shoot for, because you get access to deals like this, right? Does that make sense, guys? Do you guys understand like what private investing is and why, like, I think it's just such a powerful place to look to invest capital? And yeah, again, and that's the thing, like with crypto, like that's why so many people have been able to radically and quickly grow their wealth, because this has been the fastest growing space for the past 10 years, right? So here's the thing though, it's always evolving. So like, and I could be wrong, but I think the altcoin boom as we saw it was unique, right? Like going forward, it's going to be different. This is just the evolution of markets. And that's why yesterday we talked in the class about how we got to look where the puck is going. And this is just where I see the puck going, is obviously like listed cryptocurrencies that we can trade every day. But these private securities, guys, I'm telling you, this is huge. Yep. So again, for those of you that are already there and you're ready to go, great. For those of you that are still building, there's no harm in learning. There's no harm in becoming a wise investor now, even if the government doesn't consider you a quote unquote accredited investor, right? Another option you could have too is, you know, raising capital and building something for yourself and then parlaying that into other investments. Like there's not a right or a specific way to tackle this beast, but just tackle it. You know, just put in the work, be patient, and educate yourself. And again, let's say it takes you 5 years to get to that point, but all of a sudden you make one investment where you get 10 or 100 or 1,000x on your capital when they either go public or they get acquired or whatever. You know, like think of, does everybody know Tim Ferriss? 4-Hour Workweek. You guys know who that is? So, again, this is speculation. I haven't talked to him personally about this, but I know people that are very close to him. Apparently, he got some equity in Uber. I think it was, you know, maybe some kind of like 0.25% of as an advisor or something. If you look at the valuation of that, like, and Uber's about to go public, like that's potentially hundreds of millions of dollars, right? So like, think about that. It sounds kind of crazy and it might sound like far-fetched for some of you guys, but like those types of things happen, right? Private companies go public. And that's why like so much of the growth happens in the private markets, where a $25,000 investment can turn into tens or hundreds of millions of dollars. That's just where my mind is, you know, as one leg, as one possibility of private investments. Again, high risk, high reward though, because a lot of those could go to zero too.
And those and the thing is with like STOs and these private rounds is like those are almost like hybrids between completely private and public. And what I mean by that is that like if you know someone who's starting a company, you can invest. Like there's nothing stopping people from investing and becoming a shareholder in their new company, right? Like if I were to create a company and, you know, I got my family members or my close friends to get involved, and that gets put down in the minute book or whatever when creating the company. I mean, anybody can create a company and create and partner up in a company and create shares, right? Without having to be an accredited investor. But I think where the accredited investor thing comes in is when you have these private companies, but they still they're raising rounds in a semi-public way, just not like full IPO style, you know, or going public on a stock exchange or whatnot, right? But you know, I think what they call it is like a friends and family round, when someone starts a company and they raise money from friends and family type of thing. So there's still those kind of like early investment opportunities if you're an entrepreneur or actually are close to other people who are entrepreneurs as well. And then obviously for those who aren't accredited or not interested in that, we still have regular crypto, right? And the crypto markets are the crypto markets. They're cyclical. Everything's low and depressed now, and then, you know, if we start popping off 5-10x again, everyone's going to forget that we were even in a bear trend.
Yeah, that's how it works.
And then when they're super bullish, then it'll be time to sell again.
Yeah. Okay. Awesome. So I know we've kind of gone down the rabbit hole of security tokens, but I just I think this space offers so much opportunity that I don't want to just gloss over it. And I know there's, you know, some confusion or at least questions around the whole accredited investor thing, which again, in my opinion, I think it should be changed. I get why it's there. We actually, Rocky and I talked to a regulator in California, his opinion, and they're just as clueless as the next guy as to like why they're there, in my opinion. Like these guys just say, oh, it's lazy regulation. So anyway, with that said, I'm going to be talking a lot about security tokens over the next year. I'm going to be doing a lot of due diligence on them. I'm definitely going to be investing. Some of them will be US based. Some of them will be international. Some of them will be regular Reg D rounds. Some of them might not have any US exposure or regulation. Like this still is the Wild West. And it's still super, super early. I can just tell you, like, my focus is a couple of fold. Number one, obviously we want to maximize the opportunities that we have on this screen right here, right? The tradable assets, the stuff that we talk about in the boot camp, that is obviously the front runner of focus, right? Because it's here now, it's real, everybody has access to it. But on the backside of that, I'm looking for that company that has billion-dollar potential. I would love to get $100 million payday. And while that might seem out of the realm of possibility, I can tell you, like, I hang out with people on a regular basis that have had $1 exits or $1 billion exits. You know, there's a lot of people that are kind of quiet and behind the scenes that are in that kind of VC angel space. And the more I hang out with these people, the more I want it. So, and my goal with that is to like share that stuff with you guys and help you guys get exposure to that too. So that's it. We can go ahead and jump into the charts now. Yeah, you guys are cracking me up.
So it looks like a nice little inverse head and shoulders, possible inverse head and shoulders on the Bitcoin.
The Bitcoin. Yep. Let's zoom out. I'm going to clean up some of this stuff. So taking a look at possibilities and probabilities, I'm going to zoom out to a weekly chart just because this price pattern is so big. And you can see from the bigger picture, again, let's look at like the 30,000 foot overview and kind of drill down. After the last half of the year, we had the 6K line of hope, right? Sellers sold, we got extended panic below that. And then you can see the first area that we're really seeing some bounce or some buying activity is here around the 3K mark, which was prior resistance turn support, right? So there was another area through here around 4K, and you can see we're kind of trapped around that zone. And 4K is kind of acting like a magnet, meaning when we get above it, we get selling into it. When we get below it, buyers buy into it. If we look at the daily chart, you can see this is actually a really, really nice inverse head and shoulders potential. And there's two ways if you play a head and shoulders, there's two possibilities. You either get a run retrace extension through the neckline, right? Which the next area would be around 5,600. Okay, that was prior resistance. Also some measured moves that you can run that'll get you right around in between 54 to 5,600. So inside of this zone would be the first area. The other possibility, so that's possibility one, is head and shoulders neckline break to, we'll just call it 5,500. The second for that is a neckline rejection off of lower highs for basically another extension to the downside. So here's what the possibilities would look like. So if we got a retest of the neckline, it would basically be like a 1, 2, 3, 4 breakout from here to there, right? So if we were able to get through this neckline, that's where that buying activity would happen. Because think about this, if you're short anywhere through here, where's your stop going to be? Probably back here, right? Above this pivot high. If you're being patient and looking for some kind of confirmation, where would that happen? Well, it'd be a break of like 4,200, right? Now, let's say that over the next few days, buyers like, kind of hold up, but then volume dries up, and say volume like drops here, and then we just get like a fade, and then we start to retest 3,600. If 3,600 snapped, we'd likely get a fib extension to the downside of this bigger run. So again, pulling up some extensions, if you measure this as an entire run minus that retracement, your first area would be around 2250, right? So that's the bear case, is looking from, about 3,500. That's the downside risk. The bull case of this, the other possibility is, again, buyers squeeze up into 4,200, and then if that snapped and say we got like a big, let's say that was obviously a green candle or a green volume bar, but let's say that exceeded or at least met some of these spikes. If that looked like on that day it was closing up and there was like really, really heavy volume, that would be confirmation that this head and shoulders is working and that we're looking for an extended run to the next major market area. Which again, even if that happened, doesn't mean that that has to be the all-time low, right? Because if we zoom back out to the weekly chart, what that would look like here, what that could turn into is a retest of what was support turned resistance, right? So say we got up into the mid or the high fives or even as high as 6K, that's a major, major resistance zone, right? From almost a year of hope, right? There was a lot of people that were hoping that this was going to hold up when that snapped. And then here's what happens is people become bag holders, right? So if we got up into 6K or the mid fives on this bounce play, I would close a majority of that position as a trade, right? So again, capital buckets here are very important. When it comes to capital buckets, you either have cold storage, which is basically you accumulate and you never sell it. Then you have position trades, right? Which is typically like a 2 to 3 year hold, right? Or you have like short-term trades, right? Which is, either a day or a swing play, right? So I would look at this more as a swing play for me, like this pivot to pivot move, because you could like set risk to reward there. And or do a combination of 2 or 3 of these, right? So like I started accumulating a little back here, but I'm waiting for confirmation of that break. Now, the other way to play this from a risk to reward standpoint is if you wanted to accumulate or start buying prior to the break, what that does for you is it actually gives you better risk to reward with a lower probability of it playing out. So meaning, like, say you bought through here, you know, maximum risk would be below the head, right? Or you could tighten it behind the shoulder zones, right? Like maybe somewhere below 3,400, with a target up around, call it 55. So that gives you much better risk to reward. But again, you have to know that you're buying that kind of as an anticipatory play, where the probabilities are higher once you break the neckline. But you can see if you wait to get an average price above the neckline, the risk to reward is not as solid, right? So there's this balance in the markets between probabilities of success, right? Your win ratio. So number one is your win ratio or probabilities of a win. Number two is risk reward, right? So typically how this works is the higher the probability of a win, usually the lower the risk to reward. There's like an inverse relationship between these two, right? So at that point, then you go, okay, well, am I willing to pay for confirmation and not have as much reward, but have a higher probability of it winning? And then, or do I want to scale in a little bit early, get a lower average price, but have to watch it closely in case the neckline doesn't break, right? Does that make sense, guys? You guys understand the difference between the relationship between those two and what that looks like on this chart? Any questions? Was that clear, confusing? Cool. So for me, because we're in a bear market, I prefer to be more conservative in bear markets, right? So like what I would like to do is wait for confirmation, and I'm trading with smaller size now anyway, and then see if buyers can get that push. Now, if we start to roll over here and we, buying activity dries up and you are accumulating there, like you really need to be aware of the risk. So that's kind of thinking of it as a trade. And then like on the accumulation side of the coin, you go, okay, well, here's kind of the first sign of some buying activity that we've seen since the snap, right? We don't have confirmation that this is a low yet. We could look back in hindsight, and then let's say this pops and then consolidates around 6K and then ramps up. But in my opinion, we haven't seen like confirmation that a low has been put in, right? Now, let's say that this head and shoulders works and it pops, and then there's tremendous buying volume. That could be one. Or if we get a fast washout to retest 2K and we get capitulation down there, right? There's several ways that a bottom could play out. I'm just not all in because I don't see confirmation of a bottom yet. And sometimes you don't actually get confirmation of a bottom. Sometimes you get like a washout and a bounce, and then it consolidates and turns into accumulation, right? That's another possibility. So that's why I always say, like, it's just good to think about all of the possibilities and then how you would position yourself for all of them, right? That way you're not surprised.
Yeah, I think next week we'll be starting a new 1 week candle as of Sunday. Monday is the last day of the year. So that'll take us past any last minute tax harvesting.
Oh, yeah, good point.
As of Tuesday, it'll be interesting. Well, because we'll still be starting a new 1 week candle. It'll be interesting to see how that next 1 week candle starts to shape up. We've had some red. We've had a nice bullish engulfing candle a couple of weeks ago. We've taken a pause from that. So in that 1 week candle, it's pretty much recouped 3 weeks of red. This week we've had a bit of a pause, but the sell-off didn't bleed out terribly big. It just kind of played out on this inverse head and shoulders. So if we can produce a nice green 1 week candle that breaks the neckline with some strength, then I think we'll probably have a good chance of at least retesting that 6K zone, because we haven't even retested that area yet at all.
Yeah.
And that was such a major area for such a long period of time that even if we continued with some more downside, I would be surprised if we didn't have at least one solid test. Obviously, we know that Q1's got some interesting news events coming up with Bakkt and some other stuff coming up. So we'll see if we can dust off some of 2018 and what 2019 will bring. But
Yep.
I think 2019 will probably see more of an actual established range. We'll have more data, more details, so we'll be able to see exactly where the resistance is going to be, and if we establish into a bit of an accumulation range on stuff. So that I'm actually kind of looking forward to 2019 with the low prices and just watching the ecosystem growth in general.
Mm-hmm. Rock, here's something interesting. So taking a look back at like the end of 2014, talking about like tax loss harvesting and stuff like that.
Yeah.
Basically, going into the end of the year, it was kind of flat, putting in, a lot of pressure into 320 support.
Yeah.
And then basically in the first 2 weeks, we got a 50% sell off, right? From the high of January 1st, right? We were about 320, panicked down into the 150s or 160. And then that ended up being the low for the next year, right? So
someone's asking why in January. Oh, there was a Bitstamp hack, a multi-million-dollar hack. Mm-hmm. We were already kind of like selling off. It was kind of grinding. And then I think that was just a catalyst. It was like lighting a match and some gas-soaked rags.
And
mass panic.
Yeah, and I don't know that, I'm not saying that something like this is going to happen next year. I found that it was interesting that it was, and like you said, Rock, I mean, there was like an event, maybe like a trigger or a catalyst for this. But like, this is what I mean by like a major washout that capitulates. Like, look at this volume, guys. Like, if you look at, this is why I say, like, I really like buying washouts of over 30% on strong volume. Because if you look at this volume and how it correlates with, even if we just look at the 3-day, it was like, or 2-day, excuse me, it was like 40% drop in 2 days. And people were losing their minds. My God, people were freaking out. And then boom, that's the low. But again, at the time, you don't know that that's the low. You just know that, hey, that's a capitulation on big volume. That could be the low. And then what happens is, as time goes on and as we go back into phase one, you go, oh, we're accumulating. And then we go, all right, well, let's start accumulating. This is kind of what I'm looking for, right? And this could play out next year in several different ways. Like, we don't know what it's going to look like until after the fact. And that's why I'm so obsessed with possibilities and probabilities. It's like, possibility 1, we get a Head and Shoulders, we get a pop, we accumulate around 6K. Possibility number 2, the Head and Shoulders fails, we get a washout to 2K, which if we look at that as, let's just say from this level, that would be, look, 50%, right? So if something like that happened, imagine the market sentiment. And then I would look for a capitulation candle that like exceeds all of this prior price action, right? Maybe something as big as the volume from February, or maybe we even exceed that and we go, oh man, that's the biggest volume of all time. I would, if we got something that heavy, I would likely buy a very large position size. And then what I usually do is sell half on the first bounce, adjust stops, and then see if it works. That way, if it's not the low, you basically made some money on half of your position. You either reduce or minimize risk, and you leave yourself open for more profit in case it works. To me, it's kind of like a win-win. That's like the best way that I've figured out how to like reduce and eventually eliminate risk, is when you get in and it bounces, sell half, take profit, adjust stops, and then let it work, right? And maybe that happens, maybe it doesn't. Maybe this Head and Shoulders holds, we buy some on the breakout or accumulate a little before, whatever your preference is. We get the bounce, see what happens around 6, and then maybe accumulate from there. Or say there isn't a strong washout or a break, say it just kind of fades off and there's no real trading volume, then for me, the action is nothing. I would do nothing. The only time I'm really interested in buying in a bear market is on extreme sell-offs of over 30%, or when you have a reversal price action that confirms itself. Those are the only times that in a bear market that I get really excited about a buy. We thought we already had the capitulation, though, in that bounce plays. I mean, we've had a sell-off. Capitulation is kind of a funny word. I mean, capitulation means when the majority of weak hands or market participants give up, right? That's what happened in 2015, that scenario we just showed you. Like, anybody that wanted to sell had sold, right? So, like, really, when you look at the first dump after a major support break, could that capitulate? Yeah. But we don't want to ignore the fact that the trend is down, and we don't know when everybody is going to be out. We don't know when the capitulation's really going to happen, and you don't know. It's impossible to know until after the fact.
There's a good example of an inverse Head and Shoulders up at that 6K line.
Oh yeah, right here.
Yeah.
Yep.
Almost
so this, yeah,
looks like it's mirroring that a bit.
Exactly. Yeah. I mean, it's almost the same timeline too. So you get the inverse Head and Shoulders. It brings us back to structural resistance, lower highs. You know, again, you're in a bear market. That's why, like, you can have a reversal pattern in the price action, but that doesn't mean that it has to be the low, right? Like, there's no rule or there's no law in charting that says, like, if a reversal pattern works, that has to be the all-time high or the all-time low in a market. It can be just a small, 2 or 3 week pop or crash. So that's why I look at the major areas, right? So, like, this zone is really the first major area that we can see from history, which is why we're getting some buying activity here. All right, let's see. Okay, I think pop to 6K, pull back, accumulate in the 4 to 6K. I could see that. Would you average down on high volume, high percentage dump, looking for the 61 sell-off? What I would do, Tom, like, this is just how I do it. If you start to get a dump, I watch and if we start to dump over, like, say 20%-ish, what I do is I go down to, like, an hourly chart. Well, what I'll do first is I'll mark up major areas from either the weekly or the daily that I can find. And then if we're in the midst of, say, a 1 to 3 day dump, what I'll typically do, like, so for example, here, like, say you're looking at this as a dump, like, I'll go down to, like, an hourly chart and start to watch the price action here. And typically when you get these, like, big exaggerated candles, let's up at the volume. There we go. Typically when you see these capitulation type candles where the price action speeds up relative to the prior price action, that's usually indicative of a low, right? So see how, like, the price action was outsized from the average price action back here through the dump, and the speed actually also sped up. And then if you watch at that time, if you're watching the order book, meaning time in sales and the market depth, you would likely see the 4300s start to firm up. So you'd see some bids coming in here, and then sellers would, like, try to sell into them and they would absorb, and you're going, oh, okay, that's the low. But again, just because you have a pivot low in price action doesn't mean that has to hold, right? You can see this one just gave a pop and then boom, made another low, right? And another even more extreme capitulation, which held for a week or so. And then this is what I mean by like, here we had an inverse head and shoulders potential, but you can see it didn't do anything. Like it couldn't catch a bid. So like volume kept falling through here, and then we just kept testing these lows. And then before you know it, you're getting a descending triangle, right? And you're going, okay, buyers have dried up. Yeah, we're seeing capitulation. Yeah, we're seeing extreme volume and on these dumps, but buyers just aren't stepping in. Therefore, that turned out not to be the low, right? So that's kind of how I think about these areas. And then what looks like it could be a head and shoulders here turns out to be a much larger pattern, right? That's what can happen is like these smaller patterns can evolve into much bigger patterns.
Shall we open it up to more Q&A and polish it off with
For sure. Yeah, we've been going for about an hour and a half. So Rock, are there any other markets you want to look at? Actually, before we do that, is everybody clear on that? Do you guys understand the possibilities, the probabilities, and the plan? At least from my perspective on BTC? Cool. And then, so I'll just say this for me, guys, like I'm not actively trading any other coins right now. Like with Bitcoin selling off, until Bitcoin catches a bid, I'm not really interested in actively like swinging, like even like Ethereum or anything. I'm just kind of waiting. So of course I have my longer term capital buckets. And I think Rocky, are you kind of in a similar position?
Yeah, I'm just accumulating stuff. I've been pulling out. I doubled my Tezos position. I pulled that off into cold storage. Last week I bought a little bit more Cardano. I still have that. So basically, like what I did is, for any Bitcoin that I bought a little early, I flipped it. I started flipping it into some alts. So I got a nice flip on Ethereum when it was in double digits couple weeks ago, so that's kind of popped off a little bit. And I'm just right now I'm just kind of playing the waiting game. I'm not really buying anything more unless we have like a confirmed reversal or set new lows. So I'm kind of just like shifting into more longer term focus. I've pretty much had like, so like last year, I hedged a bunch of some of my crypto on exchanges, picked a mix of different exchanges because, they say don't keep your money on exchanges because there's counterparty risk. For the majority of the year, that money's just kind of been sitting on those exchanges. I don't really have any really quick access ways of taking money from a bank and putting it into a crypto trade. So pretty much like I just kept a ton of money sitting on exchanges all year. So I've just basically over the past month, I've just been, buying crypto and siphoning money off the exchanges. Now the money I put on exchanges, it was like profit from last year, and it's still just a percentage of my overall, risk capital or whatnot. And I pulled money out of the markets as well. And my kind of like my rule of thumb is I'm not putting any money that I pulled out of the markets into the bank or into other investments. I'm not putting back into the crypto markets, maybe other markets like equities or whatever, but it's like a one-way funnel.
Yeah. And I'm in that camp too, as long as we're in the fall and winter season. Now, once we start to like go into the next phase of accumulation, then I may add capital back in. But that's what I mean too by like being conservative. Like I'm being conservative in that I'm not like adding capital from other areas into Bitcoin. And again, guys, you just have to decide for you like how you want to do that. But so I have some like fiat on exchanges that I will take trades on Bitcoin. So like, for example, if we get the inverse head and shoulders that play out, I'll try to catch that. And what I mean by catch a bid, Kat, so what does catch a bid mean? Like if Bitcoin starts to ramp up and we start to see that kind of like waterfall of capital into other alts, then I'll look to participate in those again too. But I'm waiting for Bitcoin to catch a bid, meaning like Bitcoin to like wake up and start trading actively and like start trading with conviction and momentum. Then and only then will I entertain taking other trades in some of these larger cap alts, because typically what happens is like there's like what I call the waterfall effect, where when you have a rush of capital into Bitcoin and say Bitcoin goes up 50 or 100% or something, when people start taking profit, a pretty significant percentage of that capital that comes out of Bitcoin doesn't just go back into fiat. Typically, people will look at other cryptos for that capital to go into. So you'll kind of get like, it's pretty predictable in a way that like after Bitcoin rises, you'll start to see some other coins wake up. And it's usually pretty easy to pinpoint which ones. You know, it's like in 2016, that was Ethereum, right? It was like Bitcoin would spike and then, oh, here we go. Bitcoin's coming down, Ethereum's going up. And then we started to see like this inverse relationship. And then we saw a correlation where they both started rising at the same time. So that's really what I'm waiting for, is like Bitcoin to wake up and then start to see which other ones wake up and then go from there.
Yeah, I'm patiently waiting for, you know, historically when alts seem the most dead is usually when they start to pull off crazy moves. There's a couple of recent examples of that. Factom, FCT, and Waves.
Yep.
You know, two markets that if you just measure the percentages, now it's just, you know, on the bigger scale, it's nothing compared to what we've seen in the past. But if you look at the percentages, you know, like 1 minute, you've got this completely flat, dead, choppy market, then out of nowhere, you know, just pops up 300.
Yeah.
Waves did something similar, although there was a lot of inside trading on that because they had near the top, it came out, news broke that they raised $100 million round.
Mm-hmm.
And this is kind of what I find interesting about technical analysis and why I look at the charts first and foremost, even over fundamentals. Actually, in crypto, we have a saying, don't get fundamentaled, right?
Yeah.
You know, and what I mean by that is like, so like last year, up in the highs, you know, a lot of people got fundamentaled because, oh, it's got such great tech. Oh, look at this project. Look at that. Oh, I read a white paper. It's so good. It's going to be so great. But the charts show you what's actually happening. The charts show you the bearish divergence, the parabolic market, the distribution, the sellers starting to step in, the bulls losing control.
Yeah, price action is king for sure.
Yeah, price action
Truth
is king.
in the price action.
And I even find like with stocks too, like, because, you know, the more I look at stocks now, because I've been turning my eyes on it, it just seems like it's just all so correlated, right? Like after we broke that major support on the Dow Jones and S&P, I was just scrolling through to see anything that wasn't completely bleeding out.
Yeah.
Right? And it seems like it's very similar to crypto as much as there's a lot of like stock valuations and all that kind of stuff. It seems that there's high correlation linked to market cycles as well, right?
Yeah.
Obviously, like interest rates going up, the Fed's raising interest rates, and Trump's freaking out, and all of a sudden, like everything's dumping, right? It's like there seems like but what was interesting, even in the stock market last summer and fall, I was talking about this a lot, is I saw all the similar toppiness. I saw in the larger time frames a parabola, bearish divergence, a double top. And then obviously, you know, once support snapped, then people are kind of calling it an official bear trend, predominantly because it produced its first lower low and you know, pretty much first lower low. That's kind of lower low, lower highs type of thing, right?
Yeah.
We'll see how fast that can recover. But that kind of thing excites me because I get I don't know, I just enjoy, even if there's like temporary drawdowns and stuff, I just always much prefer enjoy trying to get deals on shit because when everything's like really up in the clouds, and there was a lot of like market sentiment euphoria moments last summer too, like Amazon breaking that $1 trillion market cap, and it was Amazon, and there was another one, Apple, right? Those
Yeah,
are
if you look at the daily, like if you look at it, it's a little bit longer term, but like if you look at like Bitcoin, how it had this like this fake out trap breakout, right?
Yeah.
Where it like gave the 1, 2, 3, 4 and then pulled back really hard. Like if you look at the S&P, this actually did the same thing in a way where, you know, it had boop, 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 breakout of all-time high, trap late people, slam down, scare them out, right? So like people trying to buy the all-time high instead of buying into panic, like you could have gotten like a 15 to 20% better price buying into panic instead of buying into hype, right?
Yeah, and you remember all the market sentiment, like everyone is celebrating the first $1 trillion market caps in
Oh yeah,
history. Trump was like just bragging on Twitter, all caps, bragging like a Twitter troll, like best market ever. I'm the best president ever. I started seeing that. I was like, oh shit, man, that's a top, man. That's the strongest sell signal I've ever seen, in my opinion.
Yeah.
And it's like anything, right? You see it in crypto, and I think what's interesting with crypto is we just get so much more because we go through so many more market cycles on an accelerated rate. I think it almost like makes crypto traders and investors a little bit more sensitive to tops.
Yeah.
Like, because last October, I basically just like liquidated my stock accounts. I was like, you know what? Maybe it won't crash, but I'd rather just kind of sit in cash and wait. Because if it recovers and it's fine, then I can reassess that, and I'd rather reassess that from a neutral position, right? Kind of like with crypto last year.
Yeah.
So we'll see how that kind of plays out. Any other questions, folks, before we wrap up? It looks like there's some green on the coin market cap. Obviously, everything's super hyper correlated.
Even on a percentage basis, like we're seeing some like big pops, but like if you look at the daily and like put it in correlation of the bigger picture, I don't see any like outsized volume on any of these that are up the most. It's kind of inside days, but it's actually interesting because you can see like an inverse head here on Litecoin, Ethereum. Actually, Ethereum's not so much, but like some of these are actually showing like reversal pattern potential. So, hey, maybe if the neckline breaks on some of these, maybe it will be like an all tides kind of rising thing. But again, there's just, there's just so much close, heavy resistance that like I would be very, very aware of A, position sizing, B, risk management and stops, and C, like pre-planning profit targets. And like, I don't always do this, but if I bought inside of like this range on Bitcoin or that head and shoulders, like I would probably be setting limits around targets just so like if it did pop, I wouldn't miss it. And I don't do that all the time, but like in tight ranges like this, counter to the long-term trend, like I'm just exponentially more conservative. It's like when all tides are rising and everything's gravy, like 16 and 17, like, bigger sizes, bigger targets, looser risk management. But now on the backside, I'm like smaller sizes, tighter risk, tighter targets, more obsessed about risk, right? It's just a shift in mentality based on the larger market conditions. So,
yeah, and for sure, if we bounce, we'd hit major resistance at that box zone for all the markets.
Yeah.
And even trading dead cats or catching bounces, it's generally a good idea to take profit back into cash. If you're an immediate trade, and we'll have confirmation of reversal when we have our first higher high. We haven't had a higher high at all in all of 2018. Hasn't happened. So if we busted through like 6K for whatever reason and then popped a higher high, like let's say maybe above that 7K area or whatnot,
Hmm.
and then retrace and then produce a higher low and then start zigzagging up, then then it would kind of almost be like a 2016 scenario. And usually
It'd be like 2013, like, oh, we don't even need an accumulation phase.
yeah.
But I think the probabilities of that happening are low. I think the highest probability is accumulation at some point. I don't know. I could be wrong though. I mean, the first bubble of 2013 did that. So
Yeah, and it was like a lot less liquid. It does kind of feel like this market has really slowed down a lot.
hmm yeah, I
Um,
mean the patterns are bigger, right? The as the market matures, the longer the patterns take to play out.
like one thing I was pointing out, that one of the main differences in the last two quarters of 2018 is that the sell-offs and bounces seem just to take a much longer time, right? Like in other previous years, you'd have like these 3-day washouts followed by like epic V bottoms, right? For majority of 2017, 16, 15, even a bunch in 2014. So it just seems like things have kind of slowed down a lot as far as the sell-offs and bounce plays, slower market. Obviously, as more liquidity pours in, it does kind of, if you look at the stock market, it could take for bloody ever for for a reversal to play out. It could actually take years,
Yep.
on some of those stocks, and sometimes it could be very, very fast and aggressive too. Any any last questions before we wrap up? We're going on close to 2 hours.
And scaling in on the way down.
So we got
What what's your question, Ninjutsu? All right. So is it possible that we're still less liquid until the hedge funds and big boys come in back? Yeah, Jared. I mean, I think that's a potential, right? Like, um, obviously we saw what the gold ETFs did to that market. I think the more markets, the better. And yeah, absolutely. Obviously, the CME futures were basically a way for Wall Street to short, but with the different type of structure, right, being settled in Bitcoin, I think that would be dope.
I'm just going to share my screen there. There's a couple of charts posted in the chat, so I'll just throw those up and could give our comments.
Here, one more thing, Rocky, and then I'm actually gonna sign off.
Right.
Josh was asking when do the stock classes begin? So next Monday is New Year's Eve, so we're off Monday and Tuesday, and then we're back on the 3rd for the crypto class, and then the first stock class will be on the 7th. So I'm gonna send an email, but just wanted to let you guys know that.
Okay, so this is a chart posted, I think, from 2015.
Yep.
Thanks,
Josh.
What's the question in relation to this chart? I'll post up the other one, and then just post these two. Same sell-offs. Yeah, like you can see where it breaks up. It hits into a major resistance and then has a big sell-off. And if we did pop and break that inverse head and shoulders, I would anticipate some heavy selling at that 6K area. Like that's a major target area that I'm just kind of waiting out. And then, if we chop around and establish a range somewhere in between all of that, then that's another story. But I highly doubt that even if we broke that neckline, that we would just V bottom and break past that 6K area without resistance. I mean, if that did happen, that would be extremely bullish, obviously. But I would still lean towards buying the depths instead of just chasing green candles if it were to do something like that. So yeah, we're coming up on about 2 hours now. So, as far as my plan and stuff, nothing has changed for me. Still accumulating. It's kind of ironic. One of the things that I wanted to accumulate lower, Decree, actually ended up taking off like a bunch. I think it's probably up like 50% or whatnot. So I'm not buying any of that. So I'm just playing a waiting game at this point. I'm just being patient, and I'm saving my last chunk of capital for further accumulation and see if we establish a range. And that's that. And like I said, with a focus on passive income, and then also moving into 2019, my goal with the lower stock prices is to start looking at rebuilding an equities portfolio. I was playing equities a bit last year. I got in on those on a bounce play on some pot stocks and stuff. I had to cut out of my Deutsche Bank trade when $10 support broke. That was a flaming pile of crap. Maybe I'll scrape that off the floor at a buck. We'll see. It turns into like an HMNY type of scenario. So it'll kind of be interesting to see how that plays out. So we'll end it there, just because we're coming up on 2 hours. But if you have further questions, you can hit me up in the chat, or we'll do perhaps maybe a bit of a longer Q&A next week. We went a little bit longer today on this update. Here's the thing: we just want to condense things for you folks and make things more compact. So these are a little bit longer, but yeah. So
Yeah, and I'm looking forward to being able to be with you guys more on these classes, and we're going to do some deep dives into different investments, and just give us feedback on the structure. I think the main points that we want to hit are developments and progress and stuff that we see in the space, also potential investments that we're looking at, either on the long term, and then obviously moving to the live charts and looking at trade opportunities, and then talking about, just any other entrepreneur stuff that we're working on in the crypto space, any other opportunities we see for anybody that's trying to build different sources of income. And then also, obviously on the stock side, Travis is going to be adding a whole guys, no kidding. Travis is like the smartest guy I've met in the equity space. I mean, doesn't get much better than being like one of the top performing hedge funds that, went from 100 million to $1 billion. So like the fact that he's part of our community is so huge, and I'm just so stoked about that. And then, Nikki doing the personal finance stuff and helping with, like financial planning and, things like that. I think it's just going to be the next level. So, every year we change, we evolve, and hopefully get better. And, just looking forward to a really awesome 2019. So.
Absolutely. All right, folks. Well, have a great Friday, everyone. Have a great weekend, and we shall see you all next week. And I'll also be in the room throughout the week too, even on non-update days or whatever. If I see anything in the markets, I'll post charts or whatnot in the trading chat or in the watch list section.
Sounds good. Thanks, guys. Talk to you soon.
All right. Take care, folks. Cheers.